Welcome to today's webinar on the projects module, which is part of your BMS system. And most of this I'll be showing you live from an actual system, but we'll talk about use cases for the projects module. And that would be things like how you would use this in large commercial projects, builder work, and residential. So there's some use cases for most of our clients out there. Think of this projects module as basically a way to combine jobs or aggregate jobs together for job cost reporting. And talking that out a little bit, on a commercial job, it could be huge with several phases, many jobs in the system. On builder work, maybe you do one job per trade. And on residential, maybe you have a soft surface job and a hard surface job if that fits your business structure better. Either way, the end game here is that the projects module is going to help you combine all that so you know what you made on the entire project, not just one phase of it. Before we begin activating the project module, there's no charge for the project module. However, you do need to activate it by emailing support@rmaster.com, support@rmaster.com, and you'll be able to get that activated for you. Again, it's no charge. So we're going to dive into it. Basic functionality, setup, advanced use cases, and reporting. So first things first is to find it. I'm going to go to sales processing and projects. And depending on some other features and options you may have turned on, it may or may not be number 7, but you're looking in sales processing for projects, and that's only once it's been activated in your system. So I'm going to projects now. And these are all the projects I have set up currently and are in an open status. And I can, of course, search by closed or both. And then I can also search these projects by a variety of different ways. Now, a project is basically, think of it as a hierarchy above a job. So a project can contain one or many jobs. So when you do these searches, it's actually searching all the jobs and orders that are within that project. Now, if you want to set up a new project, you would just hit the new project button. I'm going to go ahead and do that. So I hit new project. Then I can name my project. This can get renamed later. And you'll see it's a bunch of zeros because I haven't added any jobs yet. So I'm going to go to the details tab. This is where I'd see all the quotes and orders that have been added to this project. And to add a new one, I just do a right click and either add order or add quote to project. So I'm going to go ahead and hit add order. And it's going to pull up all my open orders. Now from here, I might just double click one if I see it right there, or I might do some searching. Oftentimes, if you have several jobs in the system and you need to combine them, you're going to filter it down maybe for a customer ID or something like that. So I'm going to filter this down to Tim. We'll pretend he's a general contractor and I've got some jobs under him. And then I might double click one of these. And that would add it to the project if it's not in one already. And what do you know, that one's in one already. So I'm going to repeat that. I'm going to go to add order to project. And then over here, there's a filter that can come in handy. You'll notice it retained the filtering I was doing. So I'm going to select all again. So we're at all my open orders. Now over here, there's a filter for a project. And here, by doing this, I can either search for a project name if I know it already, or I can search for yes or no, it is or is not in a project. So I want all my jobs not in a project. Filter. All right, then I might do more filters here. Maybe I'll go back to searching for that general contractor, Tim. So here's all the jobs for contractor Tim that are not in a project yet. So now I'm going to add this one to the project. Then I might do that again. Right click, add order. All right, so as you see, it retained my filters, and then I grab the next order I want to add to the project. So once again, think of a project as a collection of jobs. That way you can see your totals across all of those jobs in the project. That way you know what you're making on the entire project, not just individual phases. And you'll see it aggregates all the numbers below. I might even have budget versus actual numbers if I'd set the budget on those individual jobs. And then on details, I would see the one or many jobs and quotes that are part of this project. So what I just showed you is how to add a job to a project from within the project. Now, this can work the other way around. So I'm going to back up. And I'm going to go into order entry. And I'm just grabbing a random job here. And you'll notice that there's a tab for project here. You have the project module activated. You'll see that tab on every job. And I'm going to hit project. And then I have an add to project button. So first I showed you how to add the jobs to the project from the project. Now I'm doing the reverse of that. I'm adding the job to the project from the job just by hitting add to project and finding the project I want to add it to. Now, once a job's already in a project, then you'll see it listed right here, and it's easy to go view that project right here. So if you're within a job and you realize, oh, this is part of a bigger project going on, let me see what that looks like. All right, so that was the basics of building a project and adding the jobs. And I've seen this be a two-job project, you know, one for hard surface, one for soft surface in residential, if you split your jobs out that way. In builder work, I see a lot of people that will phase out into a job for tile, a job for wood, a job for carpet, and even sometimes a job for the backsplashes. So in builder work, sometimes I'm seeing 4 or 5 jobs in there. And then in commercial, it can get really granular. Some people set this up as phases of the project. If it's multifamily new construction, maybe it's corridors are one, or maybe it's by building, or maybe it's even by the unit number. So how you structure it, it really depends on the project itself and what's best for you. All right, so now that we've covered some of the basics of getting your project set up, why you would use it, how to wrap those jobs in together, now we're going to talk a little bit about the numbers, the reporting abilities, and then we'll dive a little deeper into a more commercial specific use case. But for now, we'll hit the reports first and a few odds and ends. So we do have the ability here to set a general contractor. And the purpose of that is maybe you have 50 jobs tied into a project, and maybe 1 or 2 of those jobs are claims jobs, and they shouldn't actually be part of the numbers depending what you're trying to analyze. So you can pick a general contractor for it, and then check this box to only include the primary general contractor. That's kind of a niche use case. We also, through the feedback of clients, said that when they're analyzing these numbers, there were situations where they needed to exclude sales tax and use tax. So you have that ability down here as well. You also have the ability to attach eDocs to a project, as well as notes at the project level. And then when I have all my jobs here, I can also right-click a job and flag it as a change order. So it's going to flag it as a change order and essentially put in a little different bucket, which we'll cover a little bit later in the reporting. So now the reporting on the single project I'm looking at, there's a lot on the screen here we'll go through in a minute. However, under print, there's several options up here too. So it won't visually show you every single one of these options. We'll just talk about them. Job summary. That is going to give you 1 line per job. So if you have a project with 20 jobs in it, the report's going to be a 20-line report, and it's going to give you the breakdown of each job, similar to if you ran job cost margin or some other report at the job number level. So again, it's going to break it down 1 line per job. The next 2 reports are only valid in Excel because of the amount of data here. The next one is probably the most popular, would be line summary. So this is going to give you 1 line, 1 row in Excel per line on the job. So if you had 20 jobs in this project and each job had 10 lines, this is a 200 line report. So again, it's going to have one row for every line item, and that can be handy for a variety of things. Maybe you're tracking down inventory, labor, recurring items on a job, summing totals of certain items and things like that. So one line per job line. Then the last one is really heavily detailed. This is actually one line per costing record. And you'll find this type of data on detailed JC view print, where a material line could have 7 rolls of carpet tied to it. So this version of the report in that scenario would give you 7 lines for that single job line because there's 7 different rolls of carpet. Same on labor. If you have a lot of installer pay records, it would break those out a lot as well. So it's very similar to detailed JC view print. However, it goes to Excel and it spans the entire project, not just a single job. So depending what you're analyzing, 3 different reports for 3 different use cases, basically just graduating into more and more detail with each report. And I'll go ahead and fire one off and see what it looks like here. Fired the most detailed one off to give you an idea of the most amount of detail you'll see. So you've got information about the job, the line number, the product, quantity, and then that would include cost, sell, profit margin, unit cost. Then this is where you get really granular, where you'll see for every single potential inventory record, if it exists. You know, sometimes this line might not even be assigned to a PO yet. If it does, it'll have a PO in column N. Sometimes it is only assigned to 1 roll of carpet. Sometimes it's assigned to 15. So that'll vary the size of your report here. All right, so those are some main reports at the project level. Now, if I back up a screen and I look at all my projects, then I've got a couple reports up here. Print project report is going to mostly be what you see on the screen here. A few extra columns, a little bit more detail, but it's just a list of all your projects and some totals around them. Print revenue versus billing. It's a little bigger and has some more options here. So I can narrow it down by the branch. I can look at just open or closed projects. And then similar on the screen there, I can exclude some taxes from the calculations. And I can also look at the general contractor only. This is Excel only, pretty massive report. Additionally, I can put a cutoff date in here. So I will get into a little bit of the accounting side of this. Optionally, if you're doing big commercial work and you're doing accruals, this cutoff date would come in handy for that, because maybe you need to know where were my projects as of January 31st, eliminate out any billing that happened after January 31st, for example. So this could be a month-end report that you may not run right on the evening of January 31st, so you want to put in a cutoff date. So this is your main report for multiple projects at a time. Now back to the individual project. I covered earlier on the details tab how you can basically put as many jobs in here as you want. There's a lot of different ways to do this. I've seen people on a commercial job open up on a job immediately and do what they would call like a material holding job, because you got the contract, rush, let's bring the material in, but I don't have all my jobs set up yet. I haven't structured it all out into the phases and the way I want to do it. So I want to go ahead and get one job opened up and call it material holding job. That way I can issue POs to suppliers, bring in the material, and then I'll sort it out later how I'm going to divvy it up across the jobs. So that's an option you can do. There's not really anything different you're doing. It's just an option of setting up a job and calling it material holding and bringing everything in. That way later you can set up the rest of your jobs and phase out the job the way you want it to. Now, I mentioned with residential and builder work a couple different ways to phase out the job. Commercial/new construction gets trickier. And there's not a right answer here, but what's good for your business, and sometimes it depends on the project. So let's say I'm doing a 3-story office building. Maybe I'll do 3 jobs, one for each story. you know? Maybe there's 5 distinct phases, or maybe I'm doing that 3-story office building, and then the carpet and the tile are kind of different animals. So maybe I'm going to have 6 jobs, one for each floor, but then one for carpet and one for hard surface for each floor. So 6 jobs total. And new construction of apartments or assisted living and things like that, sometimes I see people structure them per building, and sometimes I see them structure them with a single job per unit. And most of the time, the people I have that run it that way really like that setup and are happy they went that way. However, when I train new people on that way, they usually the first reaction is they think I'm crazy that you're going to now have 100 jobs for this project where they used to have just one. Now, up to you, whatever's better for your company. The advantage to having these smaller, more bite-sized jobs is they're easier to work with on the day-to-day. When it comes to things like scheduling and work ordering, you can just do the whole job at once. When it comes to invoicing, you can invoice the whole job at once. You're not going through and picking lines or partial lines and things like that. So the people that have gone to the single job per unit have generally provided good feedback with how it flows operationally. Another way to look at that single job per unit approach, a lot of companies that do new construction of apartment complexes also do replacement work in apartments. And this kind of makes it real production line, quick churning jobs, similar to the replacement side of the business. Just that you're now, when you're sending the guy out, he might have 5 work orders because he's doing 5 units that day. So again, there's not a right or wrong answer to how you structure it, and there may not even be a single answer for your company. It may depend on the project at hand. The best advice I could say is try to phase the job similar to how the actual production is going to happen, how the actual installation and work is going to get phased out. Now, another, a layer deeper here about how you structure your jobs. Another option is where you structure the revenue. Now, this portion of the conversation has a little bit of legs in builder work, but is really heavier in new construction and commercial. Some people put revenue on every single job. There's, of course, some advantages to that. Some people just literally have a billing job. So I think I have one on this project. I'm going to call it a revenue job here. In which case, I might just add a line item for each monthly schedule of values that I invoice. So here I'm just invoicing 50 grand one month, 1,000 the next month. So if you go this route, your individual jobs are not really going to have revenue on them. You're going to put all your revenue in here and just lump sum bill per the schedule of values. So I see this most common if you're doing a schedule of values in commercial work, which is AIA documents. If you don't know what AIA documents or schedule of values are, then this probably doesn't apply to you. If you are billing per schedule of values, usually what that means is your client never even sees an invoice in the system from the system. You're billing them on the schedule of values, and oftentimes you have to use the form that the general contractor requires, their iteration of the AIA document. So if you're billing on their form of the schedule of values, then really what you need in the system is to recognize the revenue and generate the accounts receivable. So when you get paid, hopefully soon, you have something to apply that payment to. So if you go that route, then you may have a billing job and you may periodically, and I'm using product code for freight. You probably have your own product code for this revenue or billing. So it's mapped to the appropriate GL that you want your revenue to be mapped to. And then you might just put billing per SOV and maybe even put January 24. And I'm going to do one billing for 40,000. And then I would invoice this single line off. And I'm not typically going to send that to the GC because they're looking at the AIA documents. But that's going to recognize the revenue And then it's going to also hit receivables so that the receivable starts aging and I have a good AR in my system. So another option of how you structure all this is some people, instead of putting revenue on the individual jobs, they put revenue on a single job. And again, they're not necessarily sharing those invoices with the client. That's just to do the accounting work to keep it straight. Now, say you go that route. All these jobs would have zero revenue on them. And I would, for conversation's sake, call these operational jobs. You need these jobs in the system to bring in material, track material, schedule, ship work orders, get installers their paperwork they need, or get it on the mobile app for them to log in and view the job. And then maybe process a return on, pay the installer. So all those day-to-day operational things need to happen on these jobs. The revenue can be there if you want, but it doesn't have to be. You could do the revenue job. Now, the reason I've seen the revenue job be popular is it becomes kind of a pain to balance the revenue on these over and over again, because then when it goes time to do your 50 grand pay app, you've got all these little small jobs that you got to cobble together to get to the 50 grand. So again, I don't personally have a preference here either way. It's whatever's better for your business. But continuing that train of thought that these jobs are at zero value, then you have revenue down here. You have a disconnect in timing between when the revenue is going to hit and when the costs are hitting. So these operational jobs, we'll call them, that are at zero sale, they still have material and labor, and they still get invoiced. So your costs are hitting your P&L based on invoicing out the operational jobs. Your revenue is hitting the P&L based on the billing line where I was billing per schedule of values. So you have costs hitting through the operational jobs and revenue hitting per the AI schedule of values. They will typically not line up perfectly. It's kind of the nature of billing per schedule of values. Even when you're doing an SOV, you're at the 20th, 22nd of the month, and you're projecting out what you think will be done by the end of the month. So that may or may not match reality. Sometimes you have a GC with a great relationship and you can, squeeze a bunch into this month's billing. Other times you kind of haven't hit a milestone and your costs are running up and you're not able to recognize any revenue. So now we're going to go to the summary tab. Now, there's a lot of information on this screen. We'll try to dissect a little bit and simplify it. I'm going to be talking about this mostly from the lens of revenue recognition and big commercial jobs. However, there's other purposes for this. Now, the three sections here: original contract, current jobs, schedule of values. We won't talk much on the schedule of values. We wrote a way in here where you can do a version of the schedule of values within the system. And I don't really train clients to use this that much, because what I found in the real world is that you have to use the format your GC makes you use. So you're usually going to do the schedule of values in Excel based on the requirements of the GC. If you want to keep up with it here, more power to you. That's up to you. But most people I meet are just doing the schedule of values in Excel because they have various formats they have to use for the GC anyways, and they don't want to keep up with it in a separate place. So we won't talk much about the bottom layer schedule of values. We'll talk about these middle two. So the middle one is the current state. This is where my jobs are at, what revenue, what cost. And this is all pulling from live numbers based on the jobs you have absorbed into this project. Now, up top where I have original contract and change orders to date, these are fields you get to enter into. So when you land a new project, you'd want to fill in the value of that contract and your projected cost. Now, as things progress, it's good that you can see where you're at in reality, but we wanted you to be able to enter that up front so you had a record of like, where did we start this thing at? Also, because when we get into revenue recognition and some of these calculations we're going to talk about, we needed good starting numbers, even though maybe we haven't even set up all our projects yet. We landed that project and, we haven't had time to dial in and set up all 50 jobs or whatever else of the project I want to get in the system, but I need to get off and running. So I needed to get that original forecast of sell and cost in there. So now we're going to talk about the columns across the top, and we put letters here so we could kind of define the formulas for you. Some of these will be kind of a quick discussion, but sell and cost, we get what those are. Margin, so that's going to be what profit margin you're running. Cost to date invoiced. So the key word here is cost. These are all the costs you've incurred and invoiced out. Now, if you are doing jobs with revenue and cost on them, this is just coming from your invoicing, and you're going to have some revenue hit and some cost hit. If you're doing the operational jobs like I spoke about, then these operational jobs get closed out like any other job. They get invoiced. They're zero value, so they're not hitting AR. You're not going to mail a zero invoice to the client, but they got to get closed out to relieve that inventory and recognize that cost. So your invoicing is what drives this column, invoicing out jobs, and it's the cost we're worried about here, not the sell. So on those $0 operational jobs, I still had material and labor. And as these phases of the job or units get complete, I'm invoicing, and that's driving this column. So now we're using what we'd call a cost completion methodology, where we're trying to estimate how complete we are with this project based on the costs we've incurred so far. So this $58,000 divided by the cost comes out to 5.82%. So based on the costs incurred, we're 5.8% completed with this project by now. So based on this cost completion percentage, I'm going to multiply that by the entirety of the project and figure out that we have earned $69,000 of revenue. Now, again, we spell out the formulas up top, but basically, based on the costs incurred, we've completed 5.8%. So if I multiply that times the revenue, we've earned $69,000 in revenue. Now, we have recognized some revenue. We did some billing. We, per the schedule of values, did some billing lines, or we invoiced on the jobs on the regular lines. One way or another, we did some billing to the client. We invoiced out some revenue, recognized some revenue. So column G here is invoicing, and that's revenue to date. So this is how much revenue you have recognized so far through the invoicing process. Now, when I compare these two columns, G and F, how much have I earned through cost completion, and how much have I recognized so far? So that gives me an over-under of what I am ahead or behind of billing on. So like I mentioned earlier, these rarely line up perfectly to the dollar together. I usually see it's pretty close, but this over under is, am I ahead of my revenue recognition? Meaning I've been able to bill out a bunch, but I actually don't even have all that many costs incurred so far. So I'm overbilled, or am I underbilled? So underbilled would be where I've had a lot of costs run up and incurred a lot of costs, but for whatever reason, I've not been able to invoice the client yet. Maybe I haven't hit a certain milestone or something like that. So in this case, I'm behind on my revenue. I'm behind the 8 ball trying to get revenue recognized. I've had more costs incurred than I have recognized in revenue based on the percent complete. Now, why do I want this number? And I'm going to kind of put a fork in the road. The accounting reason, I want you to talk to your CPA, your advisors on how you want to do revenue recognition for your company. But this over under might be part of your revenue recognition formula. This could be a part of a monthly accrual. So there's the accounting reason. Now, if I'm in the accounting discussion of wanting to know if I'm over or under billed, I want to know that as a company, not on an individual project basis. So I like explaining it all on this screen because it breaks it down real well. But from an accounting perspective, if I wanted to run this at a high level for the entire company, I'd go back a screen and run my project revenue versus billing. And I would do the cutoff for the end of month for the prior month and then run to Excel. So I would want to run this as a company to figure out if I'm ahead or behind billing, because I'm not going to do an accrual on a per project basis. I'm going to do one accrual for the month on the entire company. Again, get your CPA involvement and accounting advice on how you wish to operate it for your company. So one of the reasons I care about over under is from the company accounting standpoint. That's what we just talked about. However, on a project by project basis, this is really good to know to see how you're managing your project. This is going to directly impact your cash flow. So in this instance, I'm way behind. And I'm really just looking at row 1 for simplicity here, but I'm way behind on what I've built out so far. And which means I'm in a bad cash flow position. If this were the only project I had going on right now, cash flow would look really ugly because I've had a ton of expenses and I haven't been able to invoice for it yet. Now, I focused on this one first row for simplicity, and we won't worry about the pay apps from what I talked about earlier. You would look at change orders and how you're tracking there. And what you'd really be looking at is the total line. So I'm going to kind of do a quick recap on the total line, which is really where you'd want to be looking at. So I've got my margin. I've got the costs I've incurred so far. I'm at 4.8% complete on the entirety of the project with my change orders. My revenue's $69,000. My revenue earned based on that 4.8% complete. To date, though, I've invoiced $281,000. So I'm actually overbilled, and I've recognized too much revenue. Now, it's not a bad thing per se because you want to get that cash flow coming, but from an accounting perspective, you'd want to know that you've recognized a lot of revenue too early and you would want to accrue for that. So I'll say it one last time, get your accountant's guidance and CPA advice if you're a commercial outfit and you're going to be doing accruals, but that is why this nitty-gritty breakdown exists, is for revenue recognition and cost completion accounting. But even if you don't do that, it's still good numbers to keep your finger on the pulse of the business and know where you're at there. All right. Couple other little items. I'm going to go back to the detail tab. Like a lot of places in the system, right click, you'll find some other options. You can do cost review from here on the job. You can look at install dates. You can add more quotes and orders to the job. You can hop into this order. So it's a quick way to get into the job if you got a big project going on and you're looking around, hopping in and out of them. Flag it as a change order. So that right click gives you some more options there. You can close out a project. So at some point when it's finally all said and done, you'll close out the project. That just moves it to a closed status, similar to other areas in the system. You'll see budget versus actual on a lot of places. You can do a cost review here. That would be across all your jobs, so be careful. You're about to edit a bunch of jobs at once. And then budget versus actual is set up within each job, but those budgets versus actual do carry forward into the project. I'm sure I don't have a great example here, but down here you can see where you're actually sitting on your costs and revenue to date versus what you budgeted for. So if you utilize this, you want to make sure you're setting your budgets on the jobs as you set them up. So that's a critical one too.